If you are receiving Social Security right now, or planning to claim it soon, stop what you are doing and watch this video. Because starting this month, July 2026, several major changes that directly affect your retirement income, your taxes, and your healthcare coverage are now fully in effect. And millions of seniors are not aware of all of them. Some of these changes could put hundreds of dollars back in your pocket. Others could cost you more than you expect. And at least one of them carries a warning that every retiree in America needs to hear. This is not a drill. These are real, confirmed policy changes, and you need to know exactly where you stand. Welcome. In today's video, we are breaking down everything seniors and retirees need to know right now. In plain English, with no fluff, we are covering the 2026 Social Security updates that are in effect today, the sweeping new legislation that changed the tax picture for millions of older Americans, the Medicare costs quietly eating into your raise, and the long-term warning that Washington is not talking about loudly enough. Whether you are already collecting benefits, approaching retirement, or helping a parent navigate these changes, the next 10 minutes could be the most important 10 minutes of your week. Let's get into it. Every year, the Social Security Administration adjusts its programs to reflect economic conditions, things like inflation, wage growth, and congressional action. But 2026 is not a typical year. This year, seniors are dealing with a combination of automatic annual adjustments and the effects of one of the most significant pieces of legislation passed in a generation. Together, these changes are reshaping the retirement income picture for tens of millions of Americans, and July marks the point where many of those changes are fully in motion. Let's start with the foundation. That is up slightly from last year's 2.5% increase. For the average retiree, that translates to roughly $56 more per month, bringing the average retirement benefit from approximately $2,015 to about $2,071. Now, $56 a month may not sound like a lot. And frankly, surveys show that many seniors agree. According to AARP, 77% of older adults said a 3% COLA would not be enough to help them keep pace with rising costs. But it is real money, and it is money you are entitled to automatically, without filing any paperwork. If you began receiving Social Security in January of this year, the COLA is already reflected in your check. This is where things get more significant and more nuanced. On July 4, 2025, President Trump signed into law what is officially called the One Big Beautiful Bill Act. It is a massive piece of legislation, over 900 pages, and it has real, tangible consequences for retirees starting right now in 2026. The headline provision for seniors is a new temporary tax deduction worth up to $6,000 per person and up to $12,000 for a married couple where both spouses qualify. Here is how it works. Seniors aged 65 and older can now claim this additional deduction on their tax returns on top of the standard deduction they already receive. And here is the key detail. You do not have to itemize your taxes to claim it. Whether you take the standard deduction or not, this bonus deduction is available to you if you meet the income requirements. According to the Internal Revenue Service, the deduction is available for tax years 2025 through 2028. Now, here is what this means for your Social Security specifically. Many retirees pay federal income tax on a portion of their Social Security benefits. Up to 85% of your benefits can be taxable depending on your total income. This new deduction effectively reduces your taxable income, which for many seniors means paying significantly less in federal taxes, or in some cases, paying nothing at all on their Social Security income. The Council of Economic Advisors has stated that the new law would result in roughly 88% of seniors being able to clear their Social Security tax burden entirely, compared to about 64% under prior law. That is a meaningful shift. This year also marks the completion of a decades-long transition. If you were born in 1960 or later, your full retirement age is now officially 67. This is the final step in a gradual increase that began back in 1983. Why does this matter? Because the age at which you reach full retirement age determines how much you receive, and when you can receive all of it without any reductions or penalties. If you were born in 1959, your full retirement age is 66 and 10 months. If you were born in 1960 or later, that number is a firm 67. Knowing your exact full retirement age is critical to making smart claiming decisions. This is the biggest new financial benefit for seniors in 2026, but it is not universal, and the details matter. To claim the full $6,000 deduction, you must be age 65 or older and have a modified adjusted gross income of $75,000 or less as an individual. For married couples filing jointly, the limit is $150,000. If your income is higher than those thresholds, you may still qualify for a reduced deduction. Individual filers with income up to $175,000 and joint filers up to $250,000 may claim a partial benefit. If your income exceeds those upper limits, you receive nothing from this provision. According to the Tax Policy Center, approximately 46% of senior tax filing households will see some benefit from this deduction. The largest dollar gains go to upper middle income retirees. Lower income seniors who already owe little or no federal income tax may see minimal impact. This is especially important if you are receiving Social Security and still working part-time, receiving pension income, or drawing from retirement accounts, because all of those sources count towards your total income calculation. Bottom line, visit irs.gov or speak with a tax professional before assuming you qualify for the full amount. Here is the part of 2026 that does not get enough attention, and it is quietly reducing the value of your COLA increase. Medicare Part B premiums for 2026 rose to $200.90 per month, up from $185 in 2025. That is roughly an $18 monthly increase, and for most Medicare beneficiaries, that premium is deducted directly from your Social Security check. For many retirees, this higher Medicare cost offsets a meaningful portion of the $56 per month COLA gain. Effectively, some seniors are netting far less than they expected from this year's benefit increase. If you are on a fixed income, this is a real concern. Budgeting for this difference now is essential. In January 2025, a law called the Social Security Fairness Act was signed, eliminating two controversial rules, the windfall elimination provision and the government pension offset. These rules had 4 decades reduced benefits for retired teachers, police officers, firefighters, and other public sector workers who also received government pensions. The Social Security Administration has been processing adjustments and retroactive payments. As of mid-2025, the agency had reportedly sent out over 3.1 million payments, totaling approximately $17 billion. If you or a family member worked in a public sector role and had benefits previously reduced under these provisions, check your payment history and your My Social Security account online. Some adjustments are automatic, but outstanding questions may require direct contact with the SSA. This is especially important if you are receiving Social Security and still working. If you are under your full retirement age all year in 2026, Social Security will withhold $1 in benefits for every $2 you earn above $24,480. That is up from $23,400 in 2025. In the year you reach full retirement age, the threshold increases significantly to $65,160. At that point, the penalty drops to $1 withheld for every $3 earned above the limit. Once you have reached full retirement age, there is no earnings limit at all. You can work and earn as much as you like without any reduction in benefits. Here are 4 concrete steps to take this month. First, Log into your My Social Security account at ssa.gov and verify your earnings record for accuracy. Errors in your work history can permanently reduce your benefit calculation. If you find a mistake, contact the Social Security Administration directly. Second, speak with a tax professional about the $6,000 senior deduction before you file your 2026 return. Understanding whether you qualify, and by how much, could make a significant difference in your tax bill. Third, review your monthly budget with the Medicare Part B premium increase in mind. If your net check is lower than expected, this is likely the reason. Fourth, if you were a public sector employee and believe your benefits were previously reduced under the windfall elimination provision or government pension offset, contact the Social Security Administration to confirm whether your adjustments have been processed. Before we wrap up, there are a few important things that every viewer of this channel needs to understand. First, the $6,000 deduction is temporary. It expires after the 2028 tax year. This is not a permanent law change. It was passed through a legislative process that prevented it from being made permanent. Unless Congress acts again before 2028, this benefit goes away. Plan accordingly. Second, Social Security's long-term finances are under strain. The most recent trustees' report projects that the Social Security Trust Fund could be depleted by 2033. Some independent analysts, including those at the Committee for a Responsible Federal Budget, suggest the One Big Beautiful Bill's senior deduction they accelerate that timeline by reducing tax revenue flowing into the program. This does not mean the benefits disappear overnight, but it is a serious warning that Congress will eventually need to act to shore up the program. Third, beware of scams. The Social Security Administration does not call you unexpectedly to demand payment, ask for your Social Security number over the phone, or request wire transfers or gift cards. If you receive such a call, hang up, report it to the SSAS Office of the Inspector General. Fourth, these changes affect different seniors differently. Your situation, your income, your age, your benefit history, your Medicare status is unique. What applies to your neighbor may not apply to you. Always verify your personal information directly through ssa.gov or with a licensed financial professional. Let's bring it all together. In 2026, Social Security recipients are navigating a year that is more complex than most. Here is the summary. The 2.8% COLA added about $56 per month to the average benefit, but a nearly $18 per month increase in Medicare Part B premiums is eating into that gain for millions of retirees. The One Big Beautiful Bill, signed into law last July, creates a temporary $6,000 senior tax deduction that runs through 2028, reducing or eliminating federal taxes on Social Security income from many qualifying seniors. But it is income limited, temporary, and not for everyone. The Social Security Fairness Act is still processing payments for public sector retirees who were affected by the windfall elimination provision and government pension offset. And the full retirement age has officially reached 67 for anyone born in 1960 or later, a milestone that affects every future claiming decision. The most important thing you can do right now is stay informed, verify your own records, and consult a professional before making major retirement or tax decisions. Social Security is not just a government program. For most Americans over 65, it is the foundation of financial survival in retirement. Changes to it matter, and they matter deeply. We will continue covering these developments as they unfold. If you found this video helpful, share it with someone who needs it. And as always, stay informed, your retirement depends on it.